Greetings all, Ben here from East West. I hope you've had a good week. We're going to jump in this video to have a look at some of the names in the cannabis sector, as I've started to do. So let's just jump in. I think before we start, we have to acknowledge what's going on in the broader market. So let's just quickly brush over that. So I just brushed over this on my uranium video, so if you're watching both, you probably don't need to go through this section because I'm just going to repeat what I just said. But for you, those of you who haven't, this is obviously just a big weekly chart here of the mini S&P futures, but it is the same for the cash index. We've got this big butterfly pattern that sort of is pretty prevalent in the market at the moment, and the first target for this butterfly pattern would kind of be down here in the retracement zone, probably lies up with this old top here. But whether or not we get there is another question. I think the main thing to point out, of course, is that nothing in the market can exist in a vacuum, and this general market weakness that we're seeing, and it is a weak market. I mean, we're not exactly in corrective territory yet, but from high to low, we've fallen nearly 7% in the mini S&P. So, maybe we get down into a correction, which would take us, ironically, right down to the retracement zone. But who knows? The point being, obviously, at the moment, that there's a little bit of weakness out there, and it is going to take its toll on all stocks, and cannabis will not escape if the market continues to head south. But it's not all doom and gloom. I did some light quantitative work from an old code I had. This is the point, right? The SPX, I mean, this is the futures, but the cash is the same. It's closing down for the 6th day in a row. Okay, now, going back to 1950, I think the S&P actually became more the S&P 500 when 500 stocks were actually in it, which is 1958, but I'm not going to go into that. But since 1950, 18,695 trading days. It's only been 116 times when the market's been down, 6 days in a row. There's only been 46 times out of all this when it's been down 7 days in a row. So, the odds are really starting to skew away from us. That you can see the RSI now is low, and it doesn't often get this low. So we kind of get into that point where we're really starting to see maximum selling pressure, which is probably meaning that the bottom of this move is coming in. I'm not saying that this is the bottom. I'm just saying that the odds are beginning to shift quite dramatically into the favour of a bounce coming. But it could be a one-day bounce and we head back down. Okay, but this is also when the S&P's closed down 6 days in a row. When you work it all out, the next day was up 60% of the time. So you would say there's a 60% chance that we're going to get a bounce on Monday, and obviously that will probably be good for all the stocks because there's probably a little bit of money on the sideline at the moment, and there might be shorts who need to cover if we don't get any sort of escalation in the geopolitical situation this weekend, which I'm kind of the opinion that we won't get any escalation. Who knows? I certainly do not. But I think the odds favour a bounce coming up on Monday. So with that being said, let's just jump in and have a look, because some of the stocks are doing some pretty nice technical work just up here in close. So I'm just here at MSOS. I'm just down here on the 4 hour just to have a look at what's been happening lately. And what I can sort of see here is kind of similar to what I can see in here. So it's on a smaller scale, but I mean this one was ultra clean. But what I'm looking at here is that this corrective swing that we had down here like this, when you look at the ingredients of what happened here, okay, we came right up into the retracement zone, all right, and then this swing was almost exactly equal to this swing. So it had a one-to-one move out of its retracement zone. And then, of course, it's found its bottom, and it had another good rally where it put in a higher high. So just when I'm looking at all this, I should also point out that off the main swing pattern that it made its retracement zone and then propelled away from there. So just when I'm looking at this, the first thing I'm seeing is this is the last swing, and we're just holding there. I mean, obviously, like I said, this sort of plays into what I was talking about the S&P, where I'm thinking there's a bounce coming up pretty soon. But this is just holding its retracement zone for the moment. And just to couple with that, just when I come down here to the hourly, so we know this is held the retracement, but when I took a look at this swing and this corrective bounce, we came down again, and we just touched that one-to-one and propelled away from it. Now, of course, we've come back down, which isn't perfect. But the fact that we've repeated that behavior, so obviously what we want to see here is, I mean, this is quite deep now. We just don't want this to give way. We want to see a propulsion off here. But you know, you can see what I'm getting at there. But look, even come down here tighter to the 30-minute, and you know, there's a little hint that maybe it's not quite over, because I mean, if you look at this, okay, where do we get back to exactly? Let me just get that right on there. We got back to exactly 50%. If we're going to get another a sort of three-legged swing off this peak, where does that put us? Right down to challenge maybe these lows. So, you know, maybe we haven't quite done enough to propel away from here. Look, maybe we just collapse on Monday morning. We just don't know what the world's going to look like come Monday. But I think the point being is, as I've sort of moved down the time frames, there's enough here to suggest that within the corrections, there's the corrections within the corrections. They're all building on each other, but generally speaking, we just do seem to be holding this quite well. And you know, there's a chance that if we get one more push, well, we're starting to get some sort of double, triple bottom sort of action there, don't we? So whether or not we can get down there, of course, but you know, the push, the three waves back down, you know, the push, that's what we're looking for. So there's nothing too untoward going on here, as long as we get you know, that positive reaction come Monday, that next week that the market won't be able to start trending higher again. And that just leaves us looking at the big picture, which is the trend is still in place. You know, perhaps we've got this a newer, faster trend line coming in here, but the overall trend is still in place. We are still trending higher. We've still got a series of higher highs and higher lows. You know, as long as something untoward doesn't happen geopolitically, there's no reason to expect that the rally won't keep going. Nothing much changed here with CURLF. Same thing. It's nothing's changed from what we looked at last week, in so much as it looks like we've got a bit of a wedge action forming up here. But this week we've held the retracement of our last swing, so it's the same thing. You know, and just look at this. You know, let's just come down here to a 4 hour. Look, you know, this is nice action here. Look at it. This is all just wick bottoms, all rejection wick bottoms. Okay, 1, 2, 3, 4, 5, 6. So you know, it's set up this area of support here in the retracement zone. So we're talking about $4.75, round about there. It's holding its swing. So far, so good. Like I said, there's nothing too untoward here. We've come down a little bit here, but you know, we got to probably expect a little bit of heaviness into the close this week, because you know, for obvious reasons. But like I said, I mean, it could be real rocket fuel on Monday if we don't get anything happening out of the Middle East, and all of a sudden there's money on the sidelines want to chase in, because the risk has been kind of removed from the market, right? So there is still outside risk, because you know, the market is now starting to get off that ridiculous bandwagon of multiple cuts this year, which I quite frankly never thought looked feasible. And obviously the repricing of the bonds is also having an effect. So yeah, that might rear its head in another week or two. But we do have the QRA coming up, the quarterly refunding announcement coming up at the end of the month. So if they start issuing more on the front end, the long end bonds will probably respond positively, and that's probably going to help the stocks to a degree. But we won't worry about that until it actually happens. I think the point here is that maybe we just got to be a little bit careful of the same sort of dynamic, because you know, just because you see something one way, you can't ignore what happens the other way too. Okay, so if we're going to get a bad Monday, then maybe you can start to think about, you know, this sort of thing, more this one-to-one deeper move, which might kind of wreck the trend channel that we're looking at, and the idea of the wedge. But look, it doesn't have to go one-to-one. It doesn't have to stick to retracements. They're just guidelines, okay? So, you know, we could still get a bad Monday. We could still get sort of this, okay? And the wedge is still intact. You know, we might just find a bottom here, you know, because like I said, it doesn't, oh, pardon me, the wedge can remain intact even though we've got a big fall. It becomes about the bigger picture, okay? And if in doubt, zoom out. And what do we see here? We've got a big picture trend, and we've got a wedge forming. We don't want the wedge to break, but ultimately we don't want this to break as we highlighted last week. So that's where we sit with CURLF. Like I said, you just mentally prepare for maybe a move down to test that trend. But, you know, what else can you do? To me, it still looks pretty constructive. It still looks like a market that's getting ready to break out. Green thumb. This one up close looks a little less constructive. I'll just say it like that. I think that this one, you know, we start looking at the real big picture. You know, is this running out of gas a little bit, and are we going to come down and test the retracement of the whole move? Which, you know, to me, this kind of looks, you know, that would line up with this old low. So are we going to come down? Even that would kind of break this short-term trend we've been looking at. Is it going to come down here and just test back to here? Because, I mean, who knows? Like I said, overall, man, it's still trending. There's no need to do anything about it, particularly other than sort of disaster scenarios, disaster type scenarios. But just coming in here and looking at this on a tighter basis, there's just, I kind of don't like as much. The problem here is this wick kind of stuffed things up a little bit, okay? But you can't ignore it because it's price action, unless I go back and check. But to sort of have this, and I just don't want that to give way, because then what you just got a series of swings that are heading lower, and that's where I was sort of getting at, that maybe then we were going to come back to test that larger retracement area, which would kind of line up with the bottom here. So if it breaks this little trend line, I don't think that's a massive issue. That's just sort of short-termism. But you can see what I'm getting at here, right? It's just, it's kind of it just didn't play ball the way that the other ones did. Like, this retracement was quite deep because of that wick. I mean, maybe you can sort of say, well, if you take the wick out of it, which I don't think you should do, you could sort of take that and say we've got close to sort of 1-to-1, because, you know, that sort of, this is almost like the true price action just in here rather than this big wick up to here. But, you know, that you've got to be then very careful that you're not just trying to force fit what you want to see. Okay, so I mean, maybe we've got to look at this whole thing. It sort of hasn't really done, you know, because this is disqualified, because look, we could maybe take it off that pivot there. Okay, so maybe that's more what we're looking at. All right, I mean, who knows? It's just, if we look at this as one move, this is back up, and then are we getting another move down like that? That would be how I'd sort of look at that, the way that's forming up. But I mean, it's kind of the reverse here. I mean, you look at this. This is just swings up, swings up, swings up, swings up, swings up, and now we've just got the reverse coming back the other way. Swings down, swings down, swings down. So when does it end? So that, you know, that's kind of what I'm looking at. This would be the area I'd be looking at. Okay, back to the 50%, just around this $11 area. That would be the point of call for me for next week. That's what I'd be looking at here for green thumb. Okay, we're just going to finish up here with TRUL. Now, look, this one, it's the same thing again. This is why I keep pointing it out, because it happens over and over and over. We've got a pretty good area just forming up here off the main trend. Forget about the trends and the Elliott and, you know, all that stuff. Just look at where the market is respecting, where price is holding. Okay, right on that 50% retracement of, get that exact, the last swing. Okay, up, down, right into the retracement where it's holding. We haven't propelled away from it, you know, for all the reasons that we just talked about. But the signs are there, you know, it's good. Here's the top of the old trading range that we punctured. You could make an argument that we held it here, and now old resistance, you know, just technical analysis 101. Sorry, Saturday morning, a bit slow here. Old resistance becoming new support. Okay, right into the retracement. It's just ticking boxes. Okay, that still looks pretty good. In terms of a trend, that looks pretty steep to me, like just to maintain. So I'm not really, you know, going to hang my hat on that. And when you think about it, we are outside still the main sort of trend that we formed. That is why I remain of the opinion that we're in more danger of doing the bigger retracement in this one, because that's just how the patterns that I read tell me that it looks not unlikely in the market. So when we come into here, this is, even though this is holding for now, you apply the same techniques. I mean, what other than that sort of, this basic stuff, what gives you confidence that this can hold? Let's go down here to an hourly. And this is why I think it's laughable when people tell you that technical analysis is rubbish. Well, explain this to me. Exactly back to the 61.8. And what preceded, I mean, actually, let's be fair. That wasn't exactly to the 61.8. The 61.8 here was at $17.40 and it traded $17.41. So yes, you're right. It wasn't exact. Okay. But the length of this move, and let's project it off this. Where did the market get back to? Okay, yeah, look, I get it. It wasn't exact. The market traded 14.35 and the exact amount was 14.33. So you're right. It wasn't exact. Maybe technical analysis is rubbish. I don't know. But, hang on. Pardon me. I was off by, it looks like I might be off by a cent. Can I get it on there? Yeah, 17.30. So we missed it. But you get the point, right? And this happens just over and over and over and over again. As it was pointed out to me, and as I point out to you, and that is why I continue to lean into it, because I continue to see it. Okay, it just happens over and over again. And so, just in the short term, we'll go down to a 30-minute. Right? Just in the short term, what is the potential problem here? Remember, this was our old peak. Where did the market stop? Again. Okay, where old resistance, old support here, okay, becomes new resistance. Old support, I mean, that was a big wick through. Old support, broke new resistance at the 61.8 again. So, the danger here, of course, is that we are going to do more this again. That would be the danger, which would take us a fair bit lower on the bigger picture. Let's just go back out to that big picture and see how that would tie into what we're looking at. So could we get back down here? Well, there's no reason. We'd still be outside that trend channel. Nothing really is upsetting the apple cart if we came back down here. In fact, I'd be looking at there on the bigger Elliott picture. I'd be thinking, well, that looks potentially like a very shallow wave too. But we'll have to see. Okay, so that's where we see it. There's lots of technical stuff going on here. Okay, it's kind of interesting, but as you just sort of draw it up, the answers begin to pop out. Okay, so let's just see what happens over the weekend. Like I said, I'm not expecting an escalation in geopolitical tensions. I could be completely wrong. The world could look like a completely different place on Monday, but we can only deal with that when it actually happens. I think in the meantime, you can't sit around waiting for it. You just got to get on with your life, and getting on with your life is just staying with this sort of trend that we've got running through the cannabis stock. So that's it. Have a good weekend. Thanks for watching, and we'll see you next time. Bye for now.